Hey everybody, this is Alex Merced from alexmerced.com, and what I want to do is talk about taxes, tax deductions, and tax credits, and just kind of explain sort of the libertarian perspective on this. From a purely philosophical, moral perspective, libertarians are generally not cool with taxation and want there to be minimal taxation, and some libertarians want no taxation. Again, libertarians aren't one big homogenous group that all have the same exact opinion. But in general, taxes mean your property is taken without any kind of consent from you. That's the whole phrase that you'll hear some libertarians chant, like taxation is theft. But again, it's all shades of gray, because there are people who do want to pay their taxes, so technically for them it's not theft. But if you're someone who isn't happy about how your taxes are being spent and are not happy with the service you're getting from your government, and you cannot choose not to pay your taxes, and at that point your money is being taken from you without your consent. But again, shades of gray. But the point I want to make here is that because of that, some libertarians will consider any method, any way to give people an opportunity to keep more of their money as upholding the property rights. So basically, if you give someone a tax credit, a tax deduction, a tax cut in rates, or better indexing on what income levels hit with certain income, etc., that's all good. Okay, because you're giving people the opportunity to raise your money. So in that case, you can use the tax code to give people any out of paying taxes you can, and you might as well use it to make good policy, in the sense that, so some people are talking about things like instead of using bans and prohibition to deal with people's fears regarding the gun market, they can say, hey, how about we just give people tax benefits for doing things that we like? So how about we give people a tax credit for doing extra background checks, or a tax credit for doing X, Y, Z, and you name it. And on the grounds that, hey, you're letting people keep their own money, which is good, and you're dealing with an issue that other people care about without having to force anybody to do anything, without having to take their money or threaten them with a gun. Because if they don't follow the X mandate, then enforcement has to happen. So you're killing lots of birds with one stone. And it's all true. But other libertarians are not big fans of tax credits and tax deductions, because they're distortionary and can create the types of weird adjustments that occur later that make people want more government. Because what happens now, let's distinguish the two. A tax deduction means you can reduce the amount of income you made. So if I spend $500 on X and it's deductible, at the end of the year when we calculate how much income I made for the year, I can reduce my income by $500. Whatever income has left gets multiplied by my tax rate to figure out what my tax liability is. Okay, now there is a progressive tax rate, so not every dollar is taxed at the same rate, but the idea is that's how you generate your tax bill. Now, if I have a tax credit, I can take that tax bill and reduce that by that. So if I have a $500 tax credit and a $10,000 tax bill, I can reduce that tax bill by $500. So you actually save more money with a credit. So a credit's always more powerful than a tax deduction. So there are two different things: tax deductions that reduce my income or my taxable income, and there's tax credits that reduce my tax liability. But either way, when you have something that you can deduct and a credit you can get, that creates an incentive to try to get that credit or take advantage of that deduction, which can steer investment capital. Because certain industries that might get certain tax deductions and tax credits to benefit them, suddenly investing in those sectors look a lot more advantageous than they did without those tax credits and tax deductions. And what happens is you may steer investment in industries that don't necessarily truly return as much as the underlying investment actually returns, versus, so basically I return more because of my tax credit, tax deduction, but the actual benefit to society doesn't necessarily match up with that. It's just a result of how the tax code works. Versus industries where that benefit to society would be a lot better. So what happens in the tax code ends up moving capital to the wrong places that can make different things cost more, cost less, make certain things more available, less available, that create problems within society. And so society says, well, this is the market's fault. We need more government to fix the market, when the problem was these distortions in the market. So some libertarians, especially the more sort of economically, I don't want to say economically illiterate, I guess would be the least nicest way of saying it, I want to just say more economically savvy libertarians are much more skeptical of tax credits and tax deductions, because while you are, let's say, giving that person a little bit of opportunity to save their money today, you're giving them an unequal opportunity in the sense that somebody else who's doing something else doesn't have the same opportunity to keep a little bit more of their money, and this steers behavior in a way that could have all sorts of ramifications and actually hurt the ability for people to stay free in the long run, because those consequences end up creating a demand for more government. So there are different perspectives on that from a libertarian point of view. So again, you have some libertarians who are like, any way you allow people to save a couple more dollars in their taxes, you are protecting their property rights. While there's some libertarians who are saying, you got to be very careful. We want less taxes, but you got to be really careful about how you do it. You want to make sure you keep the budget balanced, because deficits are the same thing as taxes, and actually they're worse than taxes, because basically I have to tax you later and then so as a government, to pay for a deficit, I got to borrow money today with interest and then tax you tomorrow. So I'm taking out of the economy twice, borrowing money that other businesses could borrow and then taxing your income that you could spend and consume with today later. So it's a double whammy. So basically that more economically centered libertarians like, no, we need to balance the budget and we want to simplify the tax code so that way there's less of these distortions in how people make their decisions, because it's that sort of market, is those uninfluenced decisions where basically decisions are being made based on natural market signals in which society will be able to allocate resources the best in a way that benefits more people, so that way there isn't a demand for more government. There isn't people saying, oh man, we need more government because X problem, Y problem. More people are going to be like, oh, that worked out pretty well, so why do we need all this government? But you need to have that place where people can make better capital allocation decisions because the market signals are better. So those are sort of the two schools of thought. At the end of the day, the libertarian perspective is typically less taxation is better. It doesn't mean no government. Okay, again, there's varying degrees of government and governance depending on which libertarian you're talking to, but how you fund it can get different, and how it mechanically works gets different depending on who you're talking to. But generally, we want people to be more free to make their decisions and people to have more control over their property. So hopefully this clarified a few things, got you thinking about a few things. My name is Alex Merced from alexmerced.com. Have a great day and enjoy.